A compelling story. Creative thinking in the world of Islamic investing. The world is looking in the rearview mirror, still suffering fallout from the last 6 years of economic slowdown and deleveraging. Because of this, financial experts are now looking for a new paradigm for making wise investment decisions. Until the recent financial meltdown began in 2007, it was assumed that unfettered free markets were the key to expanding the global economy and providing jobs and hopeful futures to the world's workers and investors. Now we know that corporations and governments borrowed their futures away, that the rise of financial engineering deregulation encouraged unsustainably high debt levels, and that deleveraging continues, conspiring against future growth and prosperity. So how can we begin to address the problems that face our global economies? In economics, the goal for decades has been tying together the world's central banks to create cooperative monetary policies to help sustain the global engine of growth. Banks working together to increase or decrease interest rates to create new money to either keep the machine going or to cool off growth and control inflation. Meanwhile, economists have been working to find a way to create a new model that would help governments monitor leverage between economies. That is, to create a framework for all governments to use to monitor leverage and centralize their efforts. So what is the significance in this change of approach? This new approach, guided less by monetary policies and more by shifts in global leverage, is a key principle applied in Islamic investing, providing a logical, transparent approach to changing the investment world as we know it. The goal is sustainable growth by controlling leverage within and between global economies. Islamic investing addresses these important principles. Driving Islamic investing are several fundamentals that many do not fully appreciate. Everyone knows about rules related to haram, so-called forbidden investments. No tobacco, no casinos, no debt, avoiding certain foods, no alcohol, etc. But Islamic investing goes much deeper, to the heart of a company's balance sheet. Principles are based on an understanding of leverage, debt, and how companies should be growing properly. In spirit, it is similar to the movement towards ethical, socially responsible investing. Here are some important principles concerning Sharia-compliant investing. Number 1, there is less financial engineering, looking for the true value of investments. Number 2, there's transparency of the investment process. Number 3, there's less paper and more substance, thinking long-term, focusing on real investments. Lastly, acknowledgement of risk in each transaction. No free lunch, no guarantees. Islamic finance recognizes that there is a risk in the transaction, and this is okay, taking responsibility for your investment decisions. So how does this process work? Number 1, it identifies haram areas for investing and eliminates them from the basket of stocks. Number 2, it eliminates companies with too much debt on the books. Number 3, it looks into accounts receivable ratio, booking and realizing profits now. And lastly, it looks into cash debt ratio, unutilizing cash and short-term debt. Here's an example with the S&P 500. The S&P 500 universe is a basket comprising 500 of the largest US stocks. 3 important ratios help identify companies that have high levels of debt. These companies are removed from the index and unavailable for investment until their financial condition improves. Within this basket of stocks, we identify examples of stocks with number 1, high debt and leverage, and number 2, high level of accounts receivable. Once companies are screened for high debt levels, approximately 500 companies in the index is reduced by more than half. Conclusions: Sharia filtering reduces S&P 500 index to 233 companies. Over 90% of companies eliminated are due to financial ratios, not haram conditions. Companies eliminated have high leverage, volatility, and debt. Not surprisingly, many of these companies are in the financial sector. Here's an example of companies filtered out in the S&P 500 universe. Do you see any common themes? So what is the value of an Islamic approach? It increases performance, it reduces risk and volatility, it eliminates high debt-burdened companies within the universe of stocks, and it identifies well-run companies using value-oriented principles. The results? This is a strategy to apply to the global world of investments and for all investors, not limited to the Muslims. This strategy addresses the need for lower leverage in a company's balance sheet and less reliance on debt for growth. This is a strategy that institutional investors should consider. It provides a proper framework for identifying the best-run companies that attempt to apply ethical values and principles. And lastly, this strategy addresses the need for a global methodology to standardize leverage within our global economy.